In front of me here, we're looking at a weekly chart on SPY, and I just want to point out one or two things before we get started. We're gonna do this analysis on multi-time frame, and then before I end this video, I'm gonna go ahead and touch base on VIX and see how VIX will help us determine or help us confirm what is going on the main chart here with SPY 500 or SPY. But with considering that we do most of our trading in a shorter time frame, I'm gonna go ahead and change this from a weekly chart to a daily chart or lower time frame. But before I go ahead and do that, I just want to point out that on a weekly chart, you do see that there is still a positive signal or a bullish. We're still bullish on a weekly chart. And you might be wondering why I have my chart in multicolor. So I do have my chart in multicolor for this reason. Where you see yellow, that means there's a strong buy signal. There's a strong buying momentum in the market, and there's strong pressure in the market that should allow us to just participate in the trade without having to worry. But where the color changes to red, red alone means there's a selling in the market. There's not enough pressure to push the market down. However, when red turns to blue, that just indicate that there's enough pressure and there's enough selling momentum, enough volume at the same time in the market. Okay, so you might notice that I have here, in addition to that, yeah, I have here two indicators. These two indicators, I'm actually only using one. The other one is just a you know a moving average, and we do see that everything else is above the moving average. Everything else at the moment, actually, I'm referring to the moment. The previous week closed above the moving average. If we go to a shorter time frame, actually, before we go to a shorter time frame, I want to mention that we will be changing this chart here and there from regular or traditional candle chart pattern to a high Kanashi candle chart pattern, which is, of course, high Kanashi smoothes things out. And as a matter of fact, talking of smoothing things, let's see if we can smooth something here on this indicator. I want to change the exponential to TMA, which is triangular moving average. If you have a known of triangular moving average, I will let you carry out a research about triangular moving average. It's a beautiful tool. You need that. Um, be that you're a long-term, short-term trader, whichever day trader, option trader, triangular moving average, along with one more thing, which is high Kanashi. It's just beautiful because they both smooth out the signal. You see that just makes things a lot easier to interpret and a lot easier to see. And this is the two combos together. You have the triangular, and then you have the high Kanashi. All those together just gives you a clear trend. Okay, let's go ahead and change this from a weekly chart to a daily chart. On a daily chart, we do see that there was this spike here above the previous swing high, which was here right around July 16th, which was the higher high of all times. We had this spike, and this spike might have been driven by one or two or a few factors. The first factor which we're going to look at here is the fact that there was a change in contract in let me say the mini the future. There was a change in contract in e-mini future, and that was right here. That happened right here. There was a contract switch, which that contract switch normally brings a spike in the brings a spike in the on other securities which are underlying. And you see an example right here again. There was another contract switch. That contract switch brought that gap up there. If we take a look at another contract switch, there's another contract switch here, brought that gap up there. And there was another contract switch here that brought that gap up there. We're not going to go ahead and hunt all of this down, but I just want to point out that the gap that happened, or the spike on SPY that we saw a few days ago here, this spike was driven by the the contract switch on the mini future. Okay. Anyhow, with that spike up there, if we take a look here, we do see that there are really very interesting candle patterns forming up. Here we have a doji, and we have another doji. So we have two dojis together. But what would those dojis really tell us? It could be a reversal point, or it could, be a slight pullback, which is forming up, or is it a false breakout, or is it a true breakout? So where are we standing? And so I'm gonna go ahead and draw a few lines here. And actually, I'm gonna go ahead and draw three different lines. First, first is these two lines, which I should have only used these two key points, but I don't want to use those two key points. Let's treat these four candles as a liquidity run. Okay, if we treat those as liquidity run, we'll have something to work with. However, actually, let's take a look here. If we bring everything from that point, because I see something else down here that we could work with. Just a moment, guys. Okay, if we use that point, we'll see that we still have that liquidity run. We still have that. Generally, these white lines which I've just drawn gives us a positive. Um, I mean, it's quite bullish, is what I was saying. It's this white line is just a bullish line. It's indicating that the trend is still positive. The trend is still going up. On the other hand, or on the other hand, we do have this level right up here, which of course it's at the moment the higher high. The previous swing high was the most recent, which was 2 days ago, right there. And then of course we have that which we talked about a few seconds ago, the July one. So with those two in mind, we have a triangle which is ascending up. Okay, we have a triangle which is ascending up. So I would leave that with you to read about ascending triangle, what is most known for. I could bring this up, but I will leave that assignment with for you. So if you know what ascending triangle, how the breakout structure works on ascending triangle, just leave a comment below. I will check in with you and read your opinion on that. On the other hand, if we go ahead and put this line here, this was our previous support level on the on this bullish trend. This was our previous support level, and let's leave it green. We broke that support level. We came back, we had a pullback yesterday, which is sitting on that support level. And this pullback, it doesn't necessarily indicate that we are in a downtrend. It really doesn't. It does not. We are still above this support level, meaning there's a very high chance of breaking above this ascending triangle. Okay, but I want to point out something, that on this previous trading day, right here, where this candle was green, we had a dividend pay. We had dividends, we had dividends here. And this dividend, I want to take you a little bit back. Meanwhile, we saw with the contract split on the mini feature, the contract split gaps everything up. But I want to point out also that dividend dates have a specific character. Dividend dates tend to drive things. If you've seen here, there was a gap down from the previous day high, and dividend dates tend to gap things down instead. Okay, if you look at this day here, you will see that we gap down right down there. And the next dividend date, what happened here? Um, we did had a gap down right there. Okay, that's just with the dividend dates. Dividend dates, we had a gap down right here. Okay, so you wanna if you're trading contracts, on X dividend dates, you might. So we had everything was bearish. Everything is mostly, I can't say always, but it's usually bearish on dividend dates. Here's one of them. Here is one of them again. So dividend dates are dates which normally I think it's just a characteristic. If you haven't noticed, it's normally bearish. And we'll remember we're looking at traditional candlestick here. We're not looking at a bias candlestick, which is um, the Heikinashi. And this is the last one we're looking at. It's mostly or always bearish. Okay, there's some bearish structure which comes with dividend date. So we cannot tell that this is a pullback for a regular market structure breakout. I mean, uh, retest. Well, it's a retest at this point since it's sitting at the support level. But what I really want to point out is that there is a chance that this will pull back up. However, let's take a look at the 4 hour chart. The 4 hour chart will tell us where the next day is more likely to fall into. And before I go to the 4 hour chart, I want to point out one thing. Actually, remember on the when we're looking at the weekly chart, we kind of brought things down on Heikanashi. We viewed things on Heikanashi and things were positive. How about if we do the same thing here on a daily chart? Okay, on a daily chart, on a daily chart. And one thing that I want to point out is that if you're using Icanashi chart pattern for trading, you're looking for a doji. Okay, you're looking for a doji, and by a doji, I'm meaning candles which are like this. I'm looking for candles which are like this. You see those three candles? Those are the dojis. What those dojis does is that, what they do is that um, they give me one moment here. What those dojis does is that they represent a reversal point in the market, in a trend. Okay, they represent a reversal point. So you will see that before a reversal, there is always a doji. So you're looking for those dojis, and then once you find those dojis, only if I can draw this thing, you want to wait for what is going to happen the next day. Okay, bear with me here. All right, so those are the dojis you're looking for. You're looking for those kind of dojis which are changing, which have changed colors. And like I mentioned earlier, the four colors on my chart here represent the one that we trade, or the ones that I trade, is the yellow and blue only. The red means there is still selling. There could be pressure but if it remains red, that just means there's no volume. Okay, and there's no pressure. Green means there is buying pressure, which is things are turning positive. But if it's not yellow, there's no volume, there's no pressure. Okay, I need the volume, I need the pressure, I need the volatility at the same time. So volatility, volume, pressure, and whichever thing you can think of. If the color is blue or yellow, there's all those factors have been met. But if it is just green or red, we're missing some other components. So that means that's a portion that you should just be waiting on something else to come. If as long as you see the as soon as you see the pressure comes up, yes, take the you can take whichever action. So on this last date on a daily chart, we do see that there's a green candle. It still means that we're still there's a chance that we're still bullish, but we're lacking volume, we're lacking buying momentum, and we don't have enough pressure to push past that point. So in actual sense, it's a 50-50. Buyers and sellers have the exact same pressure. So none is pushing the other towards where, but the trend is being exhausted at that point of time, and that might be the last candle that you see in that form before another pressure comes kicks in a different way. So that's what it's telling out on this last day, meaning that there is a chance, there's a possibility. And you see, we're sitting at the upper trend line. Okay, we're sitting at the upper trend line, and of course we would expect this thing to curl down here towards uh this line here. We would expect it to be there. And once, of course, once it hits there, that's when you would kind of think of, either it's a complete breakdown to the breakout to the downside or something like that. But that normally that's what we would expect. So there is a higher chance of a break of being bearish at this point in within this coming week, starting tomorrow. I mean, starting Monday. Um, on a 4 hour chart, I'm not going to change the color from this to that, but let's just look at the 4 hour chart. On the 4 hour chart, if we actually, let me go ahead and turn off all this kind of signals. I don't really need them, or we don't really need them at all. It's just, let's keep this chart clean. We don't need the sell or the buy or what. We just need the moving average. Okay. On a 4 hour chart, we do see that there was a little bit of pullback over there. We do have that doji over there, and that doji might just necessarily mean that, um, well, because we had a slight pullback on on a bear, and we landed on this doji. This doji is indicating to us that we might just have that slight pullback, go and retest that level before we can follow this trend. I mean, yeah, trend line that I just drew, the blue line over there. So there might be a slight pullback over there, but in general, we are starting to form that bear structure, or characteristics that we are looking for. And we are still we need a clear breakout below the moving average as well. But other than that, whichever thing that follows this doji, as long as it's either it's green, I mean it's yellow, as long as it's a yellow without a tail or without a wick at the bottom, perfect. That's great. We don't really care. If it is a blue without a wick at the bottom, at the top, like these guys are, that's perfect. We don't care. We are just gonna get that, and we're gonna go in wild. Okay. So basically, for tomorrow, there is a 70 30% chance. I mean, not tomorrow, Monday, or coming this week. The week starting the 22nd, 23rd, actually the 23rd. The week starting the 23rd. There's a very high possibility of a 70 30% chance of being bearish. um, but if this slight pullback that we're seeing here was primarily because of the dividends or the ex dividends, which we saw right here, if it was because of this, then um, let's watch what the few that next day looks like. If that next day ends up pulling up, then that means that we are going to break that white line over there, which of course, let's spend that white line to be um, a red line over there. We're going to break that red line over there, and once we do that, we are expecting to set a newer or a new one, a new high, higher high, and we can't tell for sure when that's going to happen. But as of now, I know for sure there's a bearish momentum being formed in the market, and I would kind of stick around that. Um, so yeah, and the doji that we're seeing on the 4 hour chart is because of this, which is above. On If we look at a 45-minute chart, actually not 45. Let's divide 4 hours by half. Yeah. So if we look at 2 hour chart, we have um we have those green, which of course the green does not have enough momentum, as you can tell. There's no volume, there's no pressure, there's nothing. It's just dry. It's just green, telling us that, well, be ready, there's something forming up. So the market is building momentum. um with that, we do not have a lot. We do not have a lot. Like I said, let's take a quick look within these 2 minutes. Let's take a look at VIX. If VIX is decreasing, we would expect that the market should go back up. But if VIX is increasing, we'll expect that the market to drop down. So we'll revisit those ideas um, as we take a look at VIX here. VIX at the moment, VIX is below the previous support level, I mean, previous resistance level on a downtrend. The old trend on VIX is down at the moment. However, we're still expecting VIX to come around 14. This zone of 14, $14. If which let's pick this tallest wick of on the previous swing high, and then let's make a zone out of that. Which if we follow or take a look at this zone right here, um, we would expect VIX to continue falling close enough to this area of $14. And once we hit that, maybe, or not just maybe, then we will look for that level down here of right around $12. Okay. Once we're in between this 14 and $12, we should be safe. The thing should stabilize. But as of now, um, it's coming down, meaning that there is a possibility of this going off, the underlying securities going up um, on to all-time high. And for example, that includes SPY. So if this analysis threw some light on your on your table, please go ahead and just leave a like, subscribe, or whichever thing works well for you, so that we're both happy here. And check back for more content, and just share everything that you can. All right, I will check you later.